A staggering 8 trillion Shiba Inu tokens just vanished from exchanges, signaling a massive shift in sentiment. Analysts are dropping their alerts. Whales are moving silently. This isn't just a minor fluctuation, it's the quiet accumulation that precedes a mega breakout, and the data suggests the generational Shiba Inu moment has finally arrived. But what am I even talking about? Well, let me explain. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The narrative surrounding Shiba Inu has been dominated by consolidation and uncertainty for the past few weeks. The token has been trading in a tight range, with many investors questioning the next major catalyst. The price of Shiba Inu sits at approximately 842 units, with a market capitalization of around $4.95 billion and a 24-hour trading volume of $114 million. This period of low volatility, however, has been a deceptive calm before a storm of on-chain activity. The key context for today's news is the shift in behavior among the largest holders, commonly referred to as whales. Historically, a sustained period of selling or exchange deposits by these large wallets has signaled further price weakness. Conversely, a reversal of this trend, a slowing of selling, and a move toward accumulation is the most powerful indicator of an impending price surge. This is precisely the pattern that on-chain data is now revealing, setting the stage for what many are calling the mega breakout. The main event driving the current bullish sentiment is the unprecedented scale of Shiba Inu leaving centralized exchanges. Over 8 trillion Shiba Inu tokens were withdrawn from exchanges in a single 24-hour period. This massive outflow is one of the largest single-day exchange movements recorded in months, and it directly supports the narrative that whales are slowing their selling and are instead moving into a phase of aggressive accumulation. This withdrawal, valued at tens of millions of dollars, is a clear sign that these large holders are taking their assets into self-custody wallets. When tokens are moved off exchanges, it significantly reduces the immediate selling pressure on the market, as the tokens are no longer readily available for trading. This action effectively shrinks the available supply on exchanges, creating a supply shock that can lead to a rapid price increase with even a modest increase in demand. This dramatic shift in supply dynamics is the core of the mega breakout signal. The market's reaction to this massive exchange outflow has been one of quiet, yet firm, conviction. While the price of Shiba Inu has not yet seen a parabolic move, the selling pressure that had plagued the token for weeks has noticeably subsided. The price has successfully defended key support levels, and the overall market structure is beginning to tighten. The 24-hour trading volume, currently at $114 million, is expected to see a sharp increase as the news of the supply shock filters through the market. The most important reaction is the change in the psychological landscape. The fear of a major whale dump, which often keeps retail investors on the sidelines, has been significantly mitigated by the 8 trillion token withdrawal. This move by the whales acts as a massive vote of confidence, encouraging smaller investors to re-enter the market. The price is currently consolidating around 842 units, forming a strong base from which the mega breakout is expected to launch. The technical evidence for the mega breakout is rooted deeply in on-chain metrics. The total supply of Shiba Inu held on exchanges has reached a multi-month low following the recent massive withdrawal. This reduction in exchange supply is a classic precursor to a major price rally. Furthermore, the daily number of large transactions, defined as those exceeding $100,000, has seen a significant spike, confirming that the accumulation is being driven by institutional-sized capital. One notable transaction involved a whale moving 4.14 trillion Shiba Inu, valued at approximately $35 million, from a major exchange to a private wallet on December 11, 2025. This type of movement is a strong signal of long-term holding intention, as it removes the tokens from the immediate reach of traders. Technically, the slowing of selling pressure is visible in the relative strength index, which is stabilizing in the neutral zone, indicating that the market is no longer oversold, but is instead preparing for a directional move. The combination of reduced exchange supply, increased large holder transactions, and stabilizing technical indicators provides a robust foundation for the mega breakout thesis. The analysis of this whale activity points to profound implications for the future of Shiba Inu. Expert commentary suggests that the 8 trillion token outflow is not a random event, but a coordinated strategic move by smart money to position themselves ahead of a major ecosystem development or a broader market rally. The primary implication is the confirmation of a supply-side squeeze. With less Shiba Inu available on exchanges, any significant buying pressure will have a disproportionately large impact on the price. This reduction in liquidity is the most direct signal of an impending mega breakout, as the path of least resistance for the whale price is now upward. The slowing of selling by whales suggests that the generational Shiba Inu moment has arrived, where the token is transitioning from a speculative asset to a long-term holding for major players. The next major implication is the potential for a rapid zero removal. If the buying volume increases, the reduced exchange supply could trigger a cascade of buy orders, pushing the price well past previous resistance levels and potentially leading to a parabolic move. The Shiba Inu community, the Shib army, has reacted to the whale activity with palpable excitement. Social media platforms are flooded with posts celebrating the 8 trillion token withdrawal, interpreting it as a sign that the big money is finally validating their long-term vision. The community's sentiment has shifted from cautious optimism to outright bullishness, with the narrative focusing on the impending supply shock. Developer hints from the lead developer have also played a role in fueling the excitement. While maintaining a focus on utility, recent communications have subtly emphasized the importance of holding and the long-term value proposition of the Shibarium Layer 2 solution. The community is now actively tracking the exchange balances, using the massive outflow as a rallying point. The collective belief is that the combination of whale accumulation and the continued development of the Shiba Inu ecosystem is creating a perfect storm for a price explosion, reinforcing the idea that this is the generational Shib moment. The forecast for Shiba Inu is now firmly bullish, driven by the on-chain evidence of whale accumulation. In the short term, the focus is on the price breaking out of its current consolidation range. The immediate resistance level to watch is at approximately 880 units, followed by the psychological barrier of 1,000 units. A decisive break above 1,000 units on high volume would confirm the mega breakout and signal the start of a sustained rally. The long-term forecast is exceptionally strong. The slowing of whale selling and the massive accumulation suggest a long-term target of multiple zero removals. Aggressive forecasts predict a move to 1,500 units within the next 3 months, and a potential return to the all-time high of 8,616 units within the next 2 years. Investors should closely monitor the exchange balances and the volume of large transactions. Any further significant outflows will act as a powerful confirmation signal for the mega breakout and the start of the next major bull run. While the on-chain data strongly supports the mega breakout thesis, a balanced opinion requires a sober assessment of the risks. The primary risk is that the market may still be subject to broader macroeconomic pressures that could temporarily override the positive on-chain signals. A neutral insight is that, while the whales are accumulating, the price is still consolidating, and a failure to break key resistance levels could lead to a prolonged period of sideways movement, testing the patience of investors. The risk of a fake-out remains, where the price briefly surges only to be met by a wave of profit-taking from long-term holders who accumulated at lower prices. Therefore, while the generational moment may have arrived, it is crucial to approach this with a long-term perspective. The accumulation phase is a powerful signal, but the actual breakout requires sustained buying volume from the broader market. Caution is advised until the price decisively clears the major overhead resistance levels. The market has spoken, and the message is clear. The 8 trillion token outflow is the most powerful signal we have seen in months. This quiet accumulation by whales confirms that the selling pressure is exhausted and the stage is set for a historic price movement. The data is compelling, the accumulation is real, and the mega breakout is imminent. We will continue to track the on-chain metrics and technical indicators to bring you the most current updates. Until then, stay informed, stay strategic, and we'll see you in the next one. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.